Hello everyone, how's it going? In today's video, we're going to continue covering the stock called Mullen, trading under the ticker symbol MULN. Mullen is an EV manufacturer that has been trending amongst retail traders for quite some time, initially for its batteries, and then because of the volatilities and the news announcements the management has made over time. Many are still curious about what is the current situation with Mullen to see whether there is still like a chance that the stock will redeem itself back to where it was, which is almost like 100 times over what it is worth now, maybe 200 times. Seeing Mullen in its current stage is probably painful for many investors who may have put a lot of money into this company, and although I believe that the bulk of the good news might be behind us, so is the case for bad news. What now lies ahead of the company will be the possibility for even higher volatilities, the likelihood of profiting for a quick trade, and also, of course, of quick losses. Currently, the company is still treading water as it is still making new lows as we speak. The company has been filing lawsuits to discourage people from shorting its shares, but I believe that those attempts will not really produce anything significant for us, the investors, to see. With that being said, the fundamentals remain the reason why people are interested in Mullen hasn't really changed over time. And that because the company has the capacity to bring in volatilities and an unreasonable wave of demand. So that is really the lifeblood for so many investors when they try to play the ups and downs of the market with Mullen. With that being said, let's take a look at the technicals. The trading volume of Mullen has recently been around 29 million shares versus the average volume of 51 million shares. Over the previous 52 weeks period, the price fluctuated between 19 cents and $105.44. The volume of shares traded tells us how many shares have been bought and sold over the past few days, and if there is enough liquidity to support a trading strategy. If the float is thin, it would be very easy to influence the stock price, but low liquidity could also mean that the demand is limited too. When we compare the current volume against the average volume, there might be the possibility for a trend reversal or a breakthrough if the difference is very large. For instance, if the stock were to break through, the current volume would be significantly higher than the average volume. The market cap of Mullen is currently around $54 million, compared to the enterprise value of $17.3 million. So, as we compare the current price to the historical price fluctuations, the stock is currently 3% above the 1-month low, the 3-month low, and the 52 weeks low. In other words, it's almost at its historical low. And on the options market, which often gives us a hint about the market sentiment about where the stock price is probably going to go next, the implied volatility here is around 362% versus a historical volatility of 165%. The put-call volume ratio is currently around 3%. It is normal for many stocks to also have a higher put option volume than what they truly deserve because many institutional investors hedge their long positions by buying put options. The most recent volume of options traded has been around 3.8 thousand contracts a day versus the 30-day average of 11,000. In terms of open interest, the most recent volume of open interest has been around 949,000 contracts versus the 30-day average of 934,000 contracts. In terms of the shareholder structure, institutional shareholders own 0.1%, likely as a result of short-selling borrowing. In other words, there's very little, if any, institutional involvement into the shareholding structure of Mullen, which is normal given the state and reputation of the company. Typically, it's always good to see some institutional participation if you want to hold a stock for the long term. Of course, this is not really what we want to do with Mullen here. Or otherwise, if you're really looking for stocks to hold into for the long term, then there are far better options out there. The purpose of holding Mullen really is to play with the volatilities. The current short interest is around 13% of the total floats, and 60% of the transactions are coming out from the dark pools. Typically, if the short interest is above 15% of the total volume, and if a significant portion of the short volume comes out from the dark pools, this may suggest that there are institutional positions taken to short the stock. In the case of Mullen, I wouldn't say that this is really the case, although at 13%, there is indeed a sizable portion of the positions shorting the stock, meaning they lack faith into the company in general. But I wouldn't say that this is something to aim a short squeeze for necessarily. So right now, the global markets are facing a complex interplay of factors that have the potential to significantly influence the equities worldwide. In this speculative analysis, I believe that the consequences of the global inflation, surging commodity prices, and decline quantitative easing, as well as the rise of inflation rates or interest rates, plus the geopolitical instabilities, are going to play a significant part. The increasing inflation rate has been putting pressures across the globe, threatening the purchasing power, raising the input costs, and impacting corporate profitability. Companies operating internationally may face challenges in managing rising production costs and also to sustain profit margins. Those dynamics could trigger market volatility as investors adjust their risk-return expectations. The upward trajectory of commodity prices, including energy, metals, agricultural products, have been having far-reaching implications for various sectors of the global equities market. The companies heavily dependent on these commodities may experience squeezed profit margins, potentially affecting stock valuations and investor sentiment. The reduction or the end of QE's quantitative easing measures by the central banks worldwide may have resulted in reduced market liquidity. So this in turn could lead to higher borrowing costs for companies seeking capital, which may also discourage investment activities or will. The elevated market volatility plus the reduced investors' appetite may also continue to occur. Now, the central banks around the world are tackling this delicate situation of balancing the inflation rates with the economic stability and, if possible, growth. Central banks opted for aggressive interest rate hikes to combat inflations. Borrowing costs for companies have been rising, which has also slowed down business activities and also fueling the market's volatility in terms of the equity prices. Now, ongoing geopolitical tensions, including trade disputes, political uncertainties, and social unrests, will inject an additional element of volatility into the global markets. Investors may adopt a cautious approach, shifting towards safer assets, impacting the equities. Additionally, the escalating conflicts may disrupt supply chains, negatively impacting the performance of international companies. Given the interconnectedness of global markets, the aforementioned factors have reverberating effects on the US equities market. Companies with significant exposure to international market may face a lot of headwinds resulting from the economic slowdowns, disrupting the supply chains and the currency fluctuations. But nevertheless, the US market is known for its resilience, and the diverse sectors may attract investors seeking safe havens. So really, the current landscape is characterized by global inflation, surging commodity prices, reduced quantitative easing, rising central bank inflation rates, geopolitical instabilities, and also ongoing lack of certainty regarding growth. While the US market may exhibit relative strength due to the safe haven status, it's going to remain interconnected with the global economic landscape. For long-term investors, these conditions may offer opportunities to identify undervalued companies with strong fundamentals and international diversification. With that being said, short-term trades should be approached with caution because of the increased volatility and uncertainty. And also, we should be careful when assessing individual companies, sectors, or regions. Overall, if your intention is to buy Mullen, then now might be a decent entry point to start accumulating them. The stock may go even lower from here onwards, and we should expect to see an initial slump once it moves from the Nasdaq to the pink sheets. But nevertheless, the stock may continue to be volatile in the foreseeable future, and that is ultimately what we're exactly looking for. I would recommend to commit between 0.5 and 1% of your portfolio in Mullen and to split the allocation in batches of 20% at a time over the next 3 to 6 months so that you may purchase more in case of a retracement.